Hello guys and welcome back to the channel. So today the stock market went insane about Tesla in the reaction to Tesla's delivery report, and I'm going to show you why. I don't understand why. I'm just going to show you some numbers, and if you think like me and as a long-term investor, it's going to be downright funny. And hey, I will take a discount if I'm given one. I just unfortunately don't have cash right now to invest, but I'm really working on it. But if Wall Street continues to interpret the numbers in this idiotic way that they have done so far, it looks like Tesla is going to be on sale for quite some time. So let me show you what all the freak out is about. So Tesla reported their deliveries, and you can see that they produced 440,000 vehicles, but they only delivered 422,000. And this was in line with expectations, but somehow magically the expectations changed after they reported the numbers, and some sources say that Wall Street was expecting 430,000 and not 420,000, which doesn't really matter because these numbers are completely in line with what management was projecting, completely in line, and seems to be beating their yearly target. So these numbers are basically good numbers. Things are happening as we think that they should be happening. Now, what is causing partially the freak out is that they were producing 19,000 S and X vehicles, but they only delivered 10,695, and this must mean that the demand is collapsing for the S and X. So I have two things to say about this. One is that we don't know until we get the earnings call, and number two is, even if this is true, Elon Musk has already said that the S and X basically don't really mean anything for Tesla, and they could stop producing these cars, but they only continue producing them for sentimental reasons. And Tesla's mission is not to build very expensive, luxury cars for the 1%. Their mission is to accelerate the advent of an electric future, and they say in their master plans 1, 2, and 3 is that they want to cut the cost down, and this is why it makes sense that they're focusing on the 3 and Y, and it doesn't really matter to the company what happens with the S and X. So I hope you can see that. So this is kind of already a ridiculous point to worry about. Here you can see a Tesla chart, and you can see the crazy reaction today. Again, the report was in line with what we knew, beat expectations, and it's showing that they're on track to keep their yearly targets and a 50% increase. So everything was as we knew it, right? And yet we have a 6% move today, which at Tesla's size is tens of billions of US dollars. It's not 100, but it's tens of billions of dollars that was lost today. So here is the funny thing. I was reading this article about Rivian deliveries and production slip, and the stock is down. But the stock is not down as much as Tesla is down, even though they really had a production slip. And I'm just going to show you some other funny things in this. So here they're explaining that for the first quarter 23, Rivian delivered 7,900 vehicles, and they produced 9,395 units. So at the same time, I was going back in time and looking at Tesla's reports, and Tesla was almost, delivering every vehicle that they produced at this time. They definitely didn't have an almost 20% gap between, what was produced and what was given to customers. So this is huge. And even what Tesla has today is like a 5% gap, right? So this is way more of a red flag to me. And you can see that in the fourth quarter, Q4, so the quarter before, they delivered 8,054 vehicles and produced 10,020 units. So Rivian, who is supposed to be ramping up a factory and showing that they have lots of demand, they actually went backwards and produced less cars, and they have this huge gap between, the production and delivered cars, and the stock falls 4%. Okay, while Tesla falls 6%. But this is not even the funniest of all. And then you find this gem here. Investors seems to be reacting with caution to all delivery news coming from auto companies. Tesla stock is down 6% after it recorded record deliveries of almost 423,000 units Sunday. So Tesla, record deliveries, beat expectations. according to how the expectations were just before the report came out. And Tesla stock is down 6%. General Motors shares are down 1.7% after delivered more than 20,000 EVs. So this is like the company that has led the US EV revolution, according to some important guy in the White House. And they're only managing to eke out 20,000 EVs in the first quarter. Crazy. So here is the funny one, the real funny one for me. A slower than hoped for production ramp at Rivian, along with higher than expected costs, has punished Rivian stock. So whereas Tesla is doing record deliveries, everything is going as planned, their margins are amazing, and they're able to cut costs. This company had a slower ramp than expected, higher cost than expected, and the stock is only punished 4%. So this is really an insane reaction to me. So now let's look at some other gems. By the way, on Twitter, Elon Musk for some reason has changed the Twitter logo to the Dogecoin logo. This is quite funny. I saw some tweet about it that he made a bet or something, like a promise to a guy that he was going to do it, and he did it. Anyways, so now here's some interesting tweets. So Tesla is growing quarter over quarter while the rest of the auto market is shrinking quarter over quarter, yet Tesla is in trouble. Exactly. I'm so confused. This is where you can see how insane this reaction is. So I love this response here. I'm not concerned about production exceeding deliveries by 18,000, but Tesla bears will spin it a negative since DIO is increasing. That's delivery in... I actually don't know what it stands for, but I know that it's for cars that have been produced but not delivered to customers yet. 1 p.m. argued this morning that the street delivery estimates were 420,000 before the price cuts and only came in at 423,000 with 13% price cuts, hence the disappointment. So these people who think like this, it's very, very idiotic, because they think that Teslas are like iPhones, and then if Tesla does a 13% cut, we should see like a doubling of production. But Tesla factory, even if they would have cut the price 50% or 80%, they could not have physically produced more than 423% because they are ramping. So this is an idiotic argument that we are disappointed because there was a price cut and the deliveries didn't increase more than what management said. So this is the disappointment in Wall Street. If you understand the logic behind this, please let me know in the comments below. I guess what I'm most confused by is that the street says X number, the number comes in above it, then the street says, actually, you know what, not good enough, we sell now. I get the other metrics that are attached, but to me it means expectations means squat. Yeah, in this case it feels like it. Here's another one, which is a similar idiotic logic. Ross Gerber, at some point Tesla might have to actually try to sell cars. That point is now. They need to start creating demand instead of filling orders. So when you have a backlog and you're selling every car that literally comes out of your factory floor, why the heck do you need to spend money and marketing dollars which cut your gross margin to spur demand so that people can stand in line and anyways not get their cars? This is like as backwards as it gets. This is most illustrated by the fact that Tesla sold record amount of cars, but most likely at lower margin. Losing X and S sales also hurts margins. Tesla EPS are for earnings to be even or decline this year with 50% growth in sales. So here I want to see the numbers. I don't believe that the EPS is going to fall as much as people think. I understand the argument that Tesla decreased the prices, so people are expecting a huge hit to margin, but I feel like they're 100% discounting the fact that Tesla is scaling up, there is economies of scale, and they continuously innovate behind the back, so we don't even know about it, and they just keep cutting the costs. So it's definitely not as bad as this guy says. Tesla shareholders will have to accept the new paradigm soon. Lots of new challenges the company faces now that it has matured. Many issues are finally catching up to them. There is legitimate competition and it is real. So who is this legitimate competition? Is it GM selling 20,000 cars? or Rivian that is scaling down their production while their costs are going up and they're going slower than planned? Is that Tesla's competition? And again, what is exactly these issues that he's talking about? Because all I see is that the factories are going at max capacity and every car that rolls off is being sold. There is a new model coming with like Cybertruck with millions of backlog orders. So I don't really see this issue. And again, I don't really understand, if you're already complaining about the gross margins and the margins of Tesla, how does it make sense to spend millions and millions of marketing dollars so that you can have more people waiting in line? Please explain this backwards logic to me. And the last one that I want to show you is from Gary Black's Twitter account. I'm going to make my head a lot smaller. So here you can see Tesla's historic days of finished goods inventory. So that's cars produced but not delivered to customers. And this is in the percentage of deliveries. So you can see that now their inventory is 16 days of inventory, but this is like calculated based on their sales, right? So you can see that in Q1 2020, Tesla had actually more inventory, 25 days worth of inventory. Now they only have 16. So yes, you can see that the inventory is increasing. I feel that there is a very logical explanation behind it because Tesla is a mature company and they're not running this end of quarter delivery wave. Instead, they are going for a more even production. And they said that for quite a few quarters, this is going to result in increasing inventory. And I completely buy this. And even if you don't buy it, you can see that there's no time to panic because Q3 2020 was basically the same. Q2 2020 was basically the same, and it was much higher in Q1 2020. Anyways, so I think the market has gone insane, but again, I'm happy for any discount that I can get. Let me know, guys, what you think in the comments below. Please make sure you subscribe to the channel, and if you want to support the channel and get access to exclusive content, you want to get access to me, then check out the Patreon link in the description box below. It would make me very happy, and I'll see you in the next video. Ciao, ciao.